Angel Gurria, it's always great to talk to you. Thanks for joining us on Bloomberg. We spoke about 6-8 weeks ago, and you talked about the end of the line if appropriate measures are taken. We are far from the end of the line. Now, were appropriate measures not taken, or have you changed your view?
There have been a lot of very positive measures. The Spanish constitutional change, only the second in 35 years. One was for joining Europe, the other one was for having a balanced budget. The Italian modifications in the same sense. Of course, the Germans had it since 2 years ago, and the French are now discussing very actively about having what they call a règle d'or, a golden rule for a balanced budget. So this is spreading in Europe, and of course in the United States there's very important progress after the deficit discussions on the first $900 billion and then the $1.5 billion with the bipartisan commission. So there is a lot of progress. And now, of course, last night, President Obama saying we will make the space in order to accommodate a $400 billion stimulus package for jobs. So this is moving the balance between fiscal consolidation and elements of growth in the package are moving ahead.
Yes, but shouldn't that have been done 12 months ago? Because what is also spreading is fear. Stock markets are falling, and those bond yields, especially the peripheral countries, they are shooting through the roof.
Should it have been done before? I would say yes, absolutely, but it is being done now, and there is progress, as I said. So I think we should focus on that progress. We should focus on the policy convergence that should happen now in order to make progress. The problem is if you focus only on growth, then, of course, the markets will hit you very hard because they'll say you're not working enough on consolidation. If you work only on consolidation and reducing the deficits and the debt, they will say, where are your growth elements? You need a balanced mix of the two and a credible balanced mix of the two. Some countries have the space, some countries do not. The countries that do not have to persevere in their adjustment programs, and those that have the space use the space in order to have a better mix now that there's been a slowdown in the world economy.
Well, you talk about policy conversions. Is that what you're expecting the leaders at the G7 to come up with? A coordinated response, a much more coordinated response that we've seen so far?
This is what the G7 should be. This is what the G20 should be. It's about convergence. This is what the framework for a sustained and balanced and stronger growth should be about. This is what these governance efforts of the economic issues of the world should be about. It's about convergence. It's how to be mutually reinforcing.
Angel Gurria, let me just bring in my colleague Francine Lacqua, who is in Marseille, probably waiting for your arrival. Francine, you've got some questions for Mr. Gurria.
Yeah, hi Owen. Mr. Gurria, you're just saying that the G7 should be about coordinated action, about these countries trying to find a solution together. But are we going to get it here today and tomorrow? Because that's exactly what the markets want, and they won't take anything less.
This is a process, Francine. There is a meeting of deputies followed by a meeting of ministers. They're going to be focusing a lot on the Middle East and the programs that are being put together to help the transition there. There's also another meeting that is happening in just a few days in Washington, where we're going to have the G20 ministers of finance getting together, the ministers of finance of the whole world, actually, getting together in the context of the World Bank and IMF meetings. So it's a process, and you can never say it's over, we finished, we're done. You make progress, you converge on the diagnosis, and then, of course, you converge on the actions that have to be taken.
Absolutely, Mr. Gurria, but if you look at the Greek crisis, it seems that the longer the wait, the more we'll have to pay to get ourselves out of the mess. So if we don't get a clear communique from the G7 saying we're working, maybe when we're in Washington in a couple of weeks, we'll get a final solution, but we're working together. If we don't get a communique at all, will this G7 be a failure?
I think the fact that there may or may not be a communique, of course, will be up to the collective wisdom of the ministers. However, you mentioned Greece, and of course that is the very, very important issue of today. But I have said repeatedly, we have Greece, we have the problem of Ireland, the problem of Portugal. I believe that is where we draw the line in terms of countries that are in crisis, but every single country in the OECD, almost without exception, has to make a big effort to reduce the deficits. And that's a parallel, very important effort that has to be done also.
Owen again in London. You mentioned Greece. It is a distinct possibility that Greece might not get the next tranche of aid. What will happen then?
Frankly, I believe it will. I believe Greece is doing its best in order to deliver. I think that there may have to be a redesign of the programs, maybe a lengthening of some of the periods, because we're dealing with something quite unexpected, quite dramatic in terms of the size and the measure. But as I said, this is not what is happening in Europe. There is not a crisis in Europe. There are 3 countries that have a debt problem, and Greece certainly has a crisis, but you cannot describe what is happening in the rest of Europe as a crisis. I think there's a problem of concern, there's a problem of consolidation, bringing down those deficits, and at the same time keeping the recovery alive, which, as you have seen, is weakening considerably. So that should be a source of concern.
Mr. Gurria, I know you went through each steps, and actually a lot of the countries, Italy, Spain, and possibly France, is thinking about this règle d'or. But overall, what's your biggest fear? We heard Joseph Ackerman, the CEO of Deutsche Bank, saying this reminisces of what happened in 2008 in terms of the banking sector. We're also concerned that the currency wars is then transforming into a trade war, and this is something that's very real here in Marseille because it's the biggest port in Europe.
The concern about the recapitalization of the banks that was mentioned in Jackson Hole and then we've been talking about is real, but there's also the other part of the problem, which is the funding. And there, remember how the 2008 problem started, which is a drying up of the interbank, then the commercial paper market, and then, of course, the credit lines for trade, etc. So I think we want to avoid a repeat of that at all costs. And by providing the liquidity, the central banks are doing a great job in there in order to keep the market rolling, keep the short-term maturities moving along. Now, the question of the medium and the long term, as I said, is I think we made more progress on the consolidation front, paradoxically now, than in finding new sources of growth. We ran out of monetary space, ran out of fiscal space. There is very little of it, have to use it. But basically, what we're saying is go structural, go to education, go to innovation, go to green growth, go to competition, go to the labour market flexibility, go to the product market flexibility. That is what is going to keep the recovery medium and long term. And it's going to be what will make it credible. And also go social, because there are millions and millions of people who are victims of the crisis. And those are the ones that President Obama alluded to in his project last night.